Welcome to the Uzalendo podcasts. My name is Mwalimu Mutemu Akema, the host and the founder of Uzalendo Halisi Foundation. At Uzalendo Halisi Foundation, we are amplifying ordinary Kenyans doing extraordinary things. In this episode, we are featuring a trailblazer in the tech industry, Kyai Mullei. Kyai Mullei is a co-founder of M-Changa, which many of us use to crowdsource funds for all manner of things. Tune in and listen to his story. Hi, Kyai. Welcome to the Uzalendo podcast. And the podcast amplifies Kenyan alternative voices, leaders, to showcase that there are different kind of leadership apart from our political leadership that that everybody is not so happy about.
Right.
I like, maybe we can start with you introducing yourself. Who's your name? Where you're from, where you went to school, and then we'll take it from there.
All right. Well, thank you for having me. It's good to be here in this gallery. It's beautiful. My name is Kyai Mullei. I'm a 46-year-old Kenyan male. I was born in the United States. I spent my early childhood there, moved to Kenya, kind of mid-childhood, went to St. Mary's for a couple of years.
We went to the same school with the former President Uhuru.
I guess so. He was at St. Mary's. Yes, so was there, left there in the fourth, in Standard 4, and went to West Africa, to Dakar, Senegal. That's where I spent most of my childhood, my subsequent childhood. Came back to Kenya when I was 16. I went to St. Andrew's School in Turi. Did my O-levels there. Then went to the International School of Tanzania in Moshi, and went to US for college. Worked there for a while. Came back to Kenya in 2006, and started my journey as somebody in the fintech, the financial technology industry. So that's kind of my journey in a nutshell. Childhood and where I am now.
Dakar. Do you speak French?
It's not as good as I used to, but yes, when I was there, you had to speak French. Yes.
So how did you end up in Dakar? It's your dad, or?
Yes. My father at the time got a job there for an African research outfit, and so he moved the family there. So it was one of those situations.
And what did you do in college? Which college did you go to?
I went to Oberlin College in Oberlin, in Ohio, a small liberal arts college. I studied economics. Then I went to grad school in Atlanta, Georgia. Did my master's in computer information systems.
Then that connects to the work that you ended up doing.
Yes.
So a lot of people, when they go out there, go to the US or the Western countries, they really don't want to come back to Kenya. What made you come back?
Well, a few things. The field that I studied in my grad school, right, was computer information systems. And at that time, I had two choices. Either I stay in the US, right, and you get into this track, probably work for a big company and just be a cog in the wheel. But at that time, Kenya itself was making some progress towards like what has become, our Silicon Savannah. That was just starting back in 2006. So there's actually a lot of opportunity to come and start things, right? The country needed a lot of help. Businesses needed a lot of help. That was the first time businesses got online with websites, with ERP systems. All that was new. And so I made a decision to come and be part of that. That seemed more necessary and more exciting, frankly. So that's what informed me packing up right after I got that degree. And I'm coming back and trying to build the country, so to speak.
And why did you go? When you came back, where did you start, or where did you go?
So when I came back, I started consulting, did some IT consulting with small firms. I had a little outfit called Info System Solutions. That was the consulting company. And so we started, just really by helping small businesses figure out which parts of their businesses they could bring online. Not supermarkets, but little retail stores, little, accounting houses that needed some systems. And so did that for a few years. Along that journey, I noticed there was a gap. Kenya is also the home of a lot of development agencies. At that time, there was not a place where you could find consolidated information around that industry, right? So jobs, tenders, events, opportunities, so to speak. And so, about 5 years in from my IT consulting, I started a small website called DevInfo Kenya. And so that was my first, outside of the consulting, that was my first actual product development to launch in this market. And again, just because things were so dynamic at that time, there was a lot of space to do a lot of things. And so that was something that I tried. And so, that was kind of my early comeback years. So
into entrepreneurship now.
Yes, right.
How did that work out?
It didn't because, we had the users, right? But we got the model wrong. So, at that time, our model was Google ads and, it's paid to, people click and you get revenue that way. But it was so early in the internet days. People
Kenyans weren't clicking on anything.
Yeah, they weren't on basically they were barely online. So if you came online, you came for specific things, right? Now it would work, right? But then it's just a bit too early. So that was my first kind of, experience starting a business, getting, customers, but not really getting the model right. So at the end of that, so I did that for a few years, for 2-3 years. At the end of that, I met my co-founder and we founded M-Changa.
Was that funded? That's initial startup?
No, that was bootstrapped.
You're bootstrapping it.
Yeah.
Just explain what bootstrapping means.
Bootstrapping means basically doing business the way most people do business, which is you just start small and you go from there. You just, you build it from nothing, right?
Which is basically what you're doing with the Uzalendo Halisi Foundation. Financing it from the pocket, not making any money, but you have an idea and you push it to its logical conclusion. Either it succeeds or it doesn't succeed.
Right.
Yeah.
And lessons learned along the way.
you learn a lot of lessons.
But quite frankly, yes, I think that's really mostly how business works. Right. So we should kind of mainstream that thinking about how we start and what constitutes success for business. Yeah.
What would you say are the lessons you learned before you then went to start M-Changa, to found M-Changa?
Yeah. So the lesson I learned is that you have to be fulfilling a need, right? So it's easy to start a business or try to replicate a business that might, first of all, might be successful not in Kenya, right? So you have to really localize your business, right? And if that's where you want to go, and if your customers are local, really understand what they want, and just make sure it's what they need, right? If it's if you start a business and nobody needs it, then it probably won't work, right? You'd have to pivot. So be useful in business, right? Try to solve a real problem.
And I guess that's a good entry into you founding M-Changa. So you meet your co-founder. How did you meet? How did the idea come through? Is it an idea you already had, or was it something that came up, in the spur of the moment?
Yeah. So I met my co-founder through my sister at her barbecue. So it's one of those things, right? In life, you never know how these
like
things
the way you and I met.
That's right. And so we met and we were talking. He was in technology. He worked in the development space. I was just coming off of DevInfo Kenya. We actually started talking about my website. That's how we started talking and why it was working or why it was useful. And so we both had that in common. He also had experience. He had lived in Kenya for a while. He's from New York, right? So he had lived in Kenya for a while. He'd done the Harambee thing, right? As a Kenyan, of course, I had done the Harambee thing, and we talked about that, and we were talking about scalable tech businesses in Kenya, right? Again, remember I mentioned there was a lot of hype back then.
Yeah.
There's a lot of people trying different things, me included, right? So we're like, what, that's something that people do every day, right? One way or another, people support. Social networks are strong. If we built a business, and there was pain points around Harambee, how much was raised, right? You remember that you'd get the SMS. I mean, you still sort of do, right? But you get the SMS. Mutemi's raising for his wedding. You don't know how.
It was way before WhatsApp and
this is SMS, right? And maybe flashing, phone call and so it was a painful process, and it was really murky, right? Like you didn't really know what was happening, how much was being raised, who participated, whether or not the goal was reached. So
no
we
accountability at all.
Right, no accountability.
Or that the issue that was being actually fundraised for was actually a real issue.
Sure.
Or someone just wanted to con people and get money.
That's right. Or it was the issue being segmented, right? Yeah. So you'd have a case where somebody's could be raising for multiple things from their own networks. And because of that lack of visibility, you think you're donating to a wedding, somebody else thinks they're donating to school fees, right? And things like that. So we saw really an opportunity to consolidate that activity. Luckily, M-Pesa was just getting going at that time, right? So in terms of people being able to donate, that was there. There was infrastructure. We didn't have to use business bank cards or anything like that. M-Pesa was there. So we said we can marry this great technology that everybody is using with cheap SMS technology and build the first version of the product. So that was really the genesis of M-Changa. It was really to solve the Harambee problem.
From the barbecue, how long did that take now to launching the product? What was the kind of process you went through? I'm sure you had that chat and you're like, this is a great idea, let's take this forward. So
so it's a great idea to two of you, right? So what we did is we started talking to people about it, right? And just asking them, like, if you had a product like this, would you use it? Like, do you feel these are problems in Harambee? First of all, are we even solving a problem that you have? And over time, talking, for a few months, we got people like, yeah, it's a great idea. Actually, yes, I would use a product like that, right?
Individuals, organizations?
Individuals, right? At first, right? Then in having those conversations, organizations also, like, people that ran organizations that we were talking to said, this would be useful for my organization as well, especially in the dev space, in the community, space, right? Where people
charity
and things like that. So we did a lot of research, just really trying to understand whether we were solving a need at all, right? And when we were confident that we were, right? Getting ideas from the market. So for example, the market asked, well, how would you, when we do it offline, usually there's a treasurer. Usually there's multiple treasurers. Usually there's the person that communicates. So how would you replicate some of these things, right, in this product? So so there's a few months of really
how to build that accountability mechanism into now this product.
Right. What do people want to see when they donate? What would be useful information, right, to pass back to the person that donated? So a lot of research, and then we rolled out probably 7-8 months later the first version of the product, and we just tested that among friends.
Are you the one who developed it, or you work with other?
We worked with my co-founder. We worked with some local developers, local services, to put together. You need the SMS service, you need the hosting. So we did all that, but we did it locally, right? So we were also proud about that. Like we used local services to launch.
And do you face challenges, regulation with the banks, telcos, because you are to also kind of integrate with other businesses to be able to deliver your product. How was that process?
Yeah, so just to use one example, right? You can't on over so Safaricom is a SMS provider, right? It's basically the big telco. You can't really solicit for funds for political purposes over SMS, right? There's laws around that. So even as we were developing our product, right? Direct political, fundraising, right? As we developing our product, those questions arose. What are you using this pay bill for, or this till number for? So there was things like that, just basic laws. Another one, would be with banks, right? So you have this money. This money is being pulled from multiple sources, right? There's KYC requirements, right? So periodically, our banks, and we have multiple banking partners, but periodically, they pull some transactions or some fundraisers.
KYC is know your customer.
Know your customer, right? So, and especially because of Kenya and who we are and where we are geopolitically, there's potential for terrorist funding, and we have donations coming from outside of Kenya. So, just the ability to kind of monitor and track and to have those systems in place.
Money laundering,
AML, KYC, AML, CTF. These are all those acronyms around that. But yes, so there's restrictions or there's requirements for the business for that. And all the partners that we're connected to really make sure that this service, like any other, kind of complies with what they have to comply with. So Kenya has an enabling environment around fintech, right? It's had, in the financial services, in the technology space. So it's been a good place for that, right? Our fintech and others have taken advantage of sandboxes, spaces where you can start these products, and kind of before you actually launch them and make sure you work out the kinks.
And have you had any experience with this? Someone starting a fundraiser and later on turning out it's for the wrong reasons.
Yes.
Terrorism or money laundering or something like that.
Yes, we've had to discontinue fundraisers, right? We monitor fundraisers, right? There's about 30 different things that we monitor in a fundraiser, from the time that it's registered to the time that it's over, right? Wouldn't really want to belabor each and every one, but things like, where your donations are coming from, how many donations you get, where your fundraiser is trending, we monitor social media, right? So yes, so there's been circumstances where we've had to discontinue fundraisers, refund amounts donated by people, right? So yes, so it's part of the business. We like to say that our crowdfunding platform is essentially a due diligence platform, right? So you're managing these funds. These funds are for 99.9% of the time, good causes, and you just want to make sure that it remains that way.
You develop the product, test it, then when did you launch, and how was that process?
So we launched in 2013. So it was about 10 years ago, where we finally had the prototype. It was quite manual, because remember, this was 10 years ago. This is before WhatsApp.
Yeah.
This is before affordable internet. So this product was ran by SMS. So you had a short code, and you'd interact with the short code. You'd send start to the short code and start your campaign. So it's a clunky first product, but that's what we launched with in 2013. About a year later, we added credit card donations. We added a web interface. But yes, so it was about a year of SMS only. Remember the feature phones, right? The little Nokias. Yeah, you could do start to finish on that.
USSD,
SMS. And then eventually moved to web. So now you can just go online and register a fundraiser. But yeah, the early days it was a simple product, and we grew slowly.
Was it making money those early days?
It made money from the first transaction, just because we charge fees, right? So we call it being profitable at transaction level, right, for financial services. So yes, every transaction that comes in must be withdrawn, and there's a fee that you make. So that part of the model was sound. We broke even as a company in 2017.
2017.
Right, so 4 years later.
4 years later. And were you bootstrapping it at that time, or did you get some venture?
We bootstrapped in 2012. In 2013, we got investment from a local VC called Innovation for Africa at that time. So that got us to version 2 of the product. A couple of years later, we went to the UK. We were an accelerator for 9 months. We raised a little more cash there to continue fleshing out the product, to continue trying out new features. And that was really the summation of the funds that we got. So we got 2 very early rounds, and the rest has been
How much are you
organic
speaking
growth.
about? About how much?
I'd say combined about 70,000 euro. Yeah.
Okay.
Yeah, which is really small.
Yeah,
It was even
that's a
small
very
for
tiny amount,
at that time. Yeah. But it was all we needed really for the beginning. And luckily we avoided giving up too much of the company at that time. Right? So we could.
So that's always a risk when you're looking for financing. Yeah.
Yeah.
I mean, we've seen right now there's some some startups that are getting billions in terms of Kenya shillings, hundreds of millions of dollars.
Yeah.
Yeah. But you've been able to. How are you able? What was the journey now to trying and breaking even to 2017? How was that journey?
Right, so first it's a decision, right? Like you have to make a decision how you want to grow, right? So, we were okay with growing organically, right? And so there was less pressure to go out and get funding for accelerated growth. So that was the first thing, is we decided, this thing, it's going to be a long story, this M-Changa, right? Because this Harambee is not going anywhere. So we have time, right, to work it out. So that was really our approach. And that saved us, as you mentioned, from, you mentioned the tech space here. Yeah, you can get some big investment, right, to accelerate your growth and do it quickly. But that comes at some costs, right? Typically, you get a lot of money for a lot of your company.
Yeah.
So you might very, very quickly find that you're not the only decision maker in your company.
Yeah.
And then the pressure from your investors and also the market to kind of grow that fast and sometimes can cause internal problems. But it is a model, and it's a model that has worked. And I think that's what we've seen recently is maybe one or two examples of what happens with that model when the market around you can't really sustain it or things change.
Yeah, I mean there are quite a number of stories in the media right now of the startups that have not worked out. Yeah, despite sinking so much money into it. So so you continue growing. 2017, you break even. How is that? How does that manifest?
So it's really, so you have your fixed costs, right, for a technology business. And so really it's a volume play, right? So if you get past a certain volume, right, then you have enough money for your operations, right? And so it's really, we knew what our target was for the volumes that would be required to break even. So it wasn't a surprise when we broke even, right? It was around 2017.
It was, you had projected.
Yes, we had projected how big the team needs to be for the service, how much the service would cost, like in terms of hosting fees and things like that, how much marketing would cost to get us there, right? So it was really just hitting those milestones. And again, we were patient. Now, along the way, right, just because of the space where we are operating, there's interest from the development space because organizations do use the product because suddenly now you can mobilize local donations, right, for local development as part of international development. So we had interest, and we had research activities that we ran on our platform in our space with the Gates Foundation, with FSD Kenya and FSD Africa. So along the way, we've had partners kind of work with us to develop the ecosystem, right? And there was some funding there in terms of grant funding, but really it was to really understand and develop and create a product that would work for the ecosystem. So that was critical because we could get deep insights and deep research insights without paying the 10 million shillings that you need to pay to the private big research outfits, right? So we got that in other ways, like
and it was specific to fundraising,
correct,
and to Harambee,
right, and understanding that. So for example, we got out of those research relationships, we know when people give during the week, how much they potentially give, right? How frequently they give and to what type of cause. So there's a lot of insights that we managed to glean from that, that we may not have been able to pay for, but because of this ecosystem and because of those partners being around, kind of helped us. So our story has, there's multiple ways, right, that we got to where we went, but not straight investment.
But it's not just having data, it's being able to analyze that data and then leverage it.
Correct.
So is it that you had analysts, you had like how did that data, Because a lot of people do collect data, but a lot of people don't know what to do with that data.
Right.
So how did that go about?
So we formulated questions. So as a private entity that wanted to understand its own market, we formulated questions that we wanted to answer that were of interest to us. Those combined with the questions that our partners also had about the space and interventions. So essentially you create like a roster of questions that you want answered through this research. And then we have this data, right? We can go out and get more data, right, outside of the platform, right? We have people that have used the platform that we can approach from a qualitative perspective. And so it's really systematic, but it starts with both us as the entity and our research partners, kind of consolidating the questions that we want answered for real use after the questions are answered. So this would really inform how the platform develops, how the messages, kind of appear. So we managed to use the data, right, that we got from these projects to improve the product, right? So, for example, we did some research into the bottom of the pyramid, right? So we went into the slums and we found out what are the best ways to prompt for help, right? What messages work, what messages don't, how should they read, and things like that, which are very important for business, right? And for an economy where that constitutes the majority of the people, right? So the research had real world applications because it was driven by partners that really wanted to develop and maximize the ecosystem of philanthropy.
Did you integrate all these partners to use the M-Changa platform, or did you have to, for some partners, develop something similar for their own private use? Or
yeah, so we were very careful about that. We didn't want to develop multiple platforms for multiple partners just for the sake of partnering, right? Which can happen, and there's many reasons why that might be necessary in the beginning. But we, luckily, with my co-founder, also had experience in international development and to navigate that particular situation. No, so we actually managed to keep the platform front and center, right? Really not alter it as much. When and if we did, we did it offline and qualitative, right? So that happened, off the platform, and we tried to incorporate some of those features. So we were very selective about the partners that we worked with.
how many staff do you have at the moment?
So at the moment, M-Changa is a staff of 8.
8. And how is the distribution? HR, tech, what?
Customer care, finance, tech, management.
Yeah.
Yeah.
Algorithms. Have you integrated AI into?
Have we? Yes, we use AI in our social media campaigns, right? So a lot of AI tools are out there for, say, developing messaging, developing content. So we've started on that AI journey, right? Have we used it beyond that? Not yet, but that has been a big difference, right? So in terms of AI, a lot of people, I think there's some doubters, right? But at least for social media management, we've discovered that it is a huge time saver.
How does it help with them?
So, for example, you might want to A/B test on specific messaging, right? So you can use AI to generate that particular messaging, right? So you can key into same AI tools. You can say Mutemi is having a fundraiser next week, right? The AI can find multiple ways of saying that, right, or of writing that, right? So you could have up to 10 different versions of the same message, and then you can go out and test them. Whichever one resonates, you kind of you can finesse that.
And then
right?
you
can
use
plug that back into the AI and get it better. So yes, there's real practical advantages of AI.
So, and the reason I'm asking that is, the kind of number of staff is that, now you've grown beyond Kenya. Now it's M-Changa Africa. Which countries are you in?
So we expanded to Uganda, Nigeria, Ghana, Senegal, Ivory Coast, and Tanzania.
Wow.
So now you can manage campaigns in those territories.
In their own currency.
In their own currency. Yes.
How do you do that as 8 people?
Yeah, you see, so technology is a good thing, right? This could not have been possible even 5 years ago. I know you've heard of Flutterwave or players like that, right? So first of all, at a baseline, in the finance space and in the cash space, right? Africa now has mobile money in most of its major markets. That's the first thing. Without that,
so M-Pesa now has been replicated elsewhere.
Right. So you have MTN money, you have Airtel money, you have different operators. So that as a basis for being able to even offer the services in these markets, right, is something that did not exist 5 years ago. Then you have what we call aggregators in the space. So aggregators are companies that then connect all those mobile wallets and sit on top of them as a service. So it allows you to plug and play for multiple territories. So we use a couple of those aggregators that allow us then to launch the services in these markets around payments. But the same goes for SMS, right? So you have local SMS gateway providers, right, that have integrated with the telcos in these other countries. So you can, from here, send SMSs to everywhere. So the ecosystem and the regimes around SMS and finance have developed to the point where launching multiple countries on a tech payment platform is not as difficult as it was.
Yeah, because I think a lot of African businesses have faced that challenge. Different regulatory regimes around finance.
Yes.
Regulations and that kind of thing.
Correct.
So, are you saying some of these aggregators help you avoid those bottlenecks, or handle that on their side?
Yes, because you essentially you pass the compliance over to the aggregator. So the aggregator does its due diligence on the merchants like us, and then the aggregator has to comply in the markets where they operate. So you shift that burden to the service provider. But I do have to say, as much as we hear about the AU, we hear about intra-Africa trade. A lot of people are pessimistic around that. I think we shouldn't be as pessimistic. I think, starting with 54 countries and 55 maybe, different regimes, we've come a long way. I don't think that, it takes a lot of regulatory coordination for an aggregator to be allowed to operate like that, right? So we've made a lot of progress, and I can say it just from myself, right? That we've made a lot of progress there. So,
and how has that been now for M-Changa in terms of even your bottom line? Being able to operate in now, is it 7 countries?
Yes, for 7 countries. So we launched in these countries a little under 2 years ago, and not all at once.
Yeah.
So Nigeria and Ghana have just come online. Uganda, was the first. So East Africa and Tanzania, the very last. So for East Africa, for Uganda is a great market. It's like Kenya. They're a curious kind of user. A lot of the apps that we have available here, they have versions or the same apps there, banking apps and things like that. So that's been good. So Uganda is our second biggest market.
Wow.
Nigeria, just because of its size, right, has quickly risen to be like the third biggest market, even though we went online afterwards. But the typical trajectory for M-Changa is like, you recall I mentioned volumes and that inflection point where your costs, right? So we will break even in these markets faster than we did in Kenya, but we're still underwater in these markets.
Do you have to be physically present in those
No, we don't. We can service those markets all from here.
Yeah. And are you planning to go beyond Africa?
For now, no. We think there's enough here, right, in Africa, right? We're an African company. We believe in the continent, and we believe there's enough business for where we want to end up, right? We recognize our product as serving a uniquely, I wouldn't want to say uniquely African need, but it is very pervasive in Africa. It's Harambee here, it's Ubuntu in South Africa, it's everywhere, right? So, and we have seen anecdotally and even in our own experience that the pain points are the same, right? So we believe there's a lot of work to do on the continent, right? Before considering anything else.
You mentioned the AU. And there's been an attempt to integrate financially in the fintech space. I'm not sure whether those efforts are succeeding. There was a product that was launched, I think, early this year or late last year, that allows you to send money across the continent in your own currency. I don't know how is that working?
Yes, a continental switch, essentially, right? So I think the big problem is that a lot of the flow of cash, maybe to send it to, or even to use a real example, right? So if you want to send money to Sierra Leone, right, that money is routed through New York, right? So a custodian bank sits in between the two countries. So this payment platform in Africa that was launched a couple years ago is really designed to allow for transactions to happen directly between two African countries and settle in local currencies or even in dollars, right? But like, number one, to reduce the number of steps and the number of players involved, which will bring down the price, but also to settle in each other's currencies. So like any initiative like that, it starts out with large organizations, right? So SMEs are probably not going to feel that yet, but their banking partners will. So if you're an eco bank or an equity bank and there's payment, or a big organization, you do imports, right? You're big on exports, the flower industry. You will feel the impact of that, and it's real, and it's been live for the last 2 years, and it's going well. So things have.
What about these? If I want to buy yams in Nigeria and pay in Kenya shillings, when will that become possible? Your estimation.
So I still see the need for intermediaries, right, to sit in between that for the foreseeable future. Only because it's the converting back that's the problem. So you sell your yams to a Nigerian, and then you have naira, right, in your wallet. But what can you buy with that naira here, right? So you end up having a lot of stock of currency that's not interchangeable. So until we have enough trade, right, between the countries, and maybe one comes before the other, but until we have enough trade between the countries, so you holding on to that foreign currency is not a risk in and of itself, then I think then we'll be able to do that.
Or maybe we need to develop a Pan-African currency.
Yes, that would be the ideal, right? Would be really like the 50 odd currencies that we have. A good example would be West Africa. So they have a common currency. Yes, it's French. It's kind of a French-run currency. But that has really helped cross-border trade there. You leave Senegal, you go to Ivory Coast, it's the same notes, the traders, it's the same denominations. It really helps. So we've seen in blocks that can help, right? SADC is de facto a rand kind of community, right? Even though there's different currencies. So a Pan-African one would be ideal, right? And I believe we should be pushing for that.
Or maybe a digital currency. I think Nigeria, Bitcoin is doing very well in Nigeria. Yes. You can buy vegetables and tomatoes with Bitcoin in Nigeria, or pay for a bike ride. I don't know. How is that? Are you planning to integrate cryptocurrency into M-Changa?
So I find, especially in the Nigerian example, and maybe even to a certain degree to Kenya examples, that Bitcoin and cryptocurrencies were used to circumvent certain things, right? So, for example, in Nigeria, cryptocurrency made sense just because you have a highly volatile local currency. So what is a naira today? What is it at the end of the year? We are experiencing that in Kenya, right? What the shilling was just 6 months ago, right? So these are essentially assets that are a bit more stable, right? And that's why we see that happening. I think with stable currencies, right, there might be less of a need for cryptocurrencies or even digital currencies, which are essentially, kind of the same thing. If you talk about a national sovereign digital currency, that's really just what we're using now, right? Just in digital form. But I think cryptocurrencies have a future. They're niche, and maybe within certain communities as stores of value or things like that. But I would bet on a common African currency as probably the best bet for what we need to do as SMEs and our economies in general. I don't think we trade with each other without that. I think we'd still have problems trading.
Are there pushes towards that in the financial sector?
Yes, and I think if you're a big organization that again you want to trade and transact or intra-continentally, then yes, there's a push for that. We can't forget that the dollar plays that role for the world, right? So it's a world reserve currency, and that's why it's successful. It's just because we all agree to use it, right? If we agreed to use something else, then it wouldn't be the dollar, right? So I think it's first of all for Africa, it starts politically, right? Like, do we believe that, or do we want to do this, right? Do we want to use this? Are we okay with a common currency? Once we get to that,
because at some point currency also becomes national symbolism,
right?
Also a pride,
Yes,
but that only stays within your border, because I think once you travel, that's when you realize how useless the Kenya shilling is, because you can't change it even in South Africa or anywhere.
Yes, and especially for us with our smaller economies, and as you mentioned, our currency is worthless outside the borders, right? We still have to get those dollars to transact. So yeah, I think we need to look beyond these things. I understand. I'm not 100% sure, but East Africa had a common currency.
I think we used to have one.
Right.
The shilling was a common currency.
Was a common currency. So you could go to Dar es Salaam and buy the same things for the same price. You had price uniformity. You had a single market, right? Scale, a market that was large in scale. I think that's what allowed Kenyan students to go to university in Dar or Entebbe, just because the pricing was uniform and predictable. I think there's a real case to go back there, right? These small economies, with their own currencies are inefficient.
Yeah, I mean, it doesn't make sense that I can't use my Kenya shillings across the border in Tanzania or Uganda.
Right.
And we are neighbors and we are part of the same economic, East African community.
That's right.
Yeah.
And with similar economies as well. I mean, it's not like we're that different in terms of the economic structure. We're mostly still agrarian across the three
same
countries.
Same
banks, right? The same distortions in our economies. So yes, there'd be a real case to kind of consolidate. And I do have, M-Changa as a beneficiary of the work that's been done so far. Right? There's a African Crowdfunding Association. That's been around as long as we have, for about 10 years, going central bank to central bank to try to unify legislation around investment and crowdfunding and financing. So work has been done, and we've seen the difference. I can't emphasize again how this would not have been possible just even 5 years ago. So I'm very happy with the progress.
Well, who are your main competitors, African competitors?
Our main competitors are cash. People still fundraise.
Yeah, using
cash, right? Our second competitor would be the mobile money itself, because you can fundraise, without
directly
through this platform. You'll lose certain things in that campaign, right? But that's our competitor. In the continent, when we started out, there was a lot of crowdfunding platforms. But like many services, like mobile wallet, mobile money services, these are volume plays. And so right now, there's really only 3 other platforms on the continent that kind of rival M-Changa. There's one called Backup Buddy in South Africa, and there's one called Thunder Fund in South Africa.
Yeah, I've seen Thunder Fund.
Those are the only 2. So there's 3 of us with Africa to
Are you the
kind
biggest?
of work with. We are the biggest by volume. So we've had the most donations. The South African platform has raised the most money.
In terms of venture capital?
No, in terms of just the number of...
Oh, South Africans give more.
Yes. South Africans give a factor of 3.5 to 4 times more on average than Kenyans. It's a bigger economy. There's bigger disposable incomes. So yes. So with fewer donations, they've raised more. But we're all around the same age. We all started together, so we learn from each other, we collaborate with each other, and we work together. So we do joint projects with some development partners in different countries. We share our learnings.
So it's friendly competition.
Right.
Yeah.
Yeah.
So I remember the story of how I met you in this space during COVID at a common friend's house. And I was ranting about how you guys, when I said what I do, and there I'm trying to mobilize local resources to get Kenyans to fund their own initiatives. And someone said, why don't you use M-Changa? And then I was like, yeah, I tried, but they don't support political causes. They don't allow fundraising for political causes or activism for that matter, which is political. And they're like, that guy, another mutual friend said, but no, you should talk to the founder. I said, yeah, I talked to the founder, which is your co-founder.
Right.
I talked to him and he was categorical, no, we can't allow that. And as I was walking out, he says, but the founder is here. And I was like, I mean, we had spent, is it 2 days together in that house?
That's right. Yeah. This is COVID.
2 days in that house. And I was surprised that, a Kenyan had actually founded M-Changa, and part of the reason why I wanted to have this conversation with you. But the fact that, I don't know, how do we get to the point where Kenyans actually, how do we build the trusts? Because I think it's a matter of trust. Kenyans have contributed to fundraisers towards causes, and a lot of that has been abused.
Yes.
The biggest being the Kenyans for Kenyans, where 750 million Kenya shillings was raised, almost $1 billion. And the main organizations that were involved were Safaricom and Red Cross.
Yeah.
And the fact that there was murky accountability around that kind of killed that spirit that was emerging at a time when M-Pesa was coming in, digital, ability to give digitally, to contribute via SMS.
Sure.
How and you have the insights. How do we, and I know it's a tough question, but how do we, let me just track back a bit. We know Kenyans give. Kenyans give towards their causes. Kenyans give towards church, towards whatever.
Yes.
How do we get them to support kind of initiatives that us in civil society are doing, do-gooders are trying to work on? Because there's always that complaint that nyinyi mmepewa pesa na donors kutoka ng'ambo, and you're not doing this work for Kenyans. You're just doing it out of to earn money, to get donor funding. So how do we mobilize local resources using platforms like yours?
Right. So there's a couple of things that you mentioned there. I guess I'll start with the fact that Kenyans give. Kenya is consistently in the top 5 most giving nations on the planet, right? So it's something we do, and it's quite unique here. I mean, if you go to our neighbors, yes, it's there, but not to the same degree. And like you mentioned, Kenyans will be giving to multiple things. Their chama, their church, and things like that. In terms of trust, I want to kind of separate the two types of fundraising. What we see there's personal fundraising for medical bills and things like that. Those are closed networks that know each other, right? With a tool like this that enhances the visibility, right? You can always check with your networks and ensure that what's happening is happening, right? It becomes trickier, like you said, when you're raising nationally for a cause. But this is the very things that you bring up are the reason why M-Changa exists, right? Is to enhance the accountability and the visibility. What we've learned in the 10 years is that visibility is the biggest kind of determinant in terms of a cause being something that becomes successful and that is trusted. Visibility in terms of who is participating, right? I think what happened with campaigns like Kenya for Kenya, right, or times where you just see a pay bill and an appeal, right, is that what's lost is the support that's being generated, right, which can itself be used as a motivator to generate more support. So with Kenya for Kenyans, if you just hear $1 billion was raised, you don't know what, was half of that corporate, was some of it Kenyan. Like if you knew that for the 750 million shillings that was raised, 100,000 Kenyans donated, they were from this region, right? I think that now things that the platform allows you to do, right?
And the power of that was actually the asking for 10 shillings. So
Right.
that was the brilliant story about it.
Little by little, right? 10 shillings at a time, right? And so what we do as a platform is we open up that visibility. So at a baseline, you can tell the kind of support this cause is generating, right? And because you have access to the people that are donating, if they happen to be in your networks, we've had donors do due diligence among themselves, right? So when did you donate? What did you hear? Okay, what do you know about this cause, right? But M-Changa is also on the back end after you've raised, right? Being able to direct those funds to the causes where they were initially supposed to go. So on our platform, right, it's very difficult to change the destination of funds midway, which is what happens in a lot of these national campaigns that become murky, is that the destination of the funds changes at some point. And then you've lost the entire credibility. It was supposed to go to this village. It ended up, going somewhere else.
Or someone's bank account or something.
Right, and things like that. So really, enforcing the fact that, whatever the fundraiser is set up for and wherever the funds are supposed to go, in cash or in kind, and in kind it can be like going to a specific retailer that delivers specific goods. You can manage that on the platform, right? So really the destination of funds is another determinant of the success of a fundraiser. But finally, having multiple custodians of the funds, right? So at M-Changa, you can have up to 5 different people co-manage the fundraiser, right? So you have joint responsibility over that. It's not one person with one bank account, right? It's multiple people. You're really going to have to coordinate together to, commit fraud together.
Yes, unless you set out to defraud Kenyans.
And it's a really good balance. We've had some custodians refuse to authorize withdrawals because they weren't settled on where the funds should go or what the fund should be used for. So all these checks and balances, I think, so a combination of technology, a combination of visibility really would help the local ecosystem and organizations then fundraise and engender trust when it comes to fundraising.
And one of the things my organization, Uzalendo Halisi Foundation, hopes to partner with M-Changa, and we've had that conversation, is how to take this to the next level, how to build that trust and see what kind of initiatives that we can work on together. Talk about your own now. You started this as a business. You didn't. A lot of people. You're not shy about saying you did not start this to do good, as a cause, but you started this because it was a business. How has your journey been? Your perception of the platform which has grown, and what you want to do with it?
Yeah. So I started it as a business. You are correct, or we started it as a business, right? There was a clear value proposition and a clear market for it. But over the years, and we've been doing this for 10 years, over the years, what has really kept us going, right? As we were growing in the early days was people giving testimonies as to the use and their use of the platform and how it helped them. So fairly quickly, we realized we were actually transforming lives, right? Most of the fundraisers on our platform are for medical purposes. So you're mobilizing funds for people that really, really need those funds or in a dire situation. So it became apparent to us, through the feedback that we were getting from our customers, how impactful we were being in people's lives and how our insistence on transparency and being prudent and being careful with the management of the service was really actually making a difference. So about 5 years in, we realized we were actually making impact in the market, and it motivated us to continue to approach business from a transparent and honest perspective, just because of the impact that we're making. So now, as we go out to the other African countries, we lead with that, right? We lead with the fact that we do things in ways that really help, society. And this has also generated interest from the press, what are you guys doing? How are you doing it? And so it started out as a business, but because of its use and because of the things that people use it for, we feel like we've helped Kenyan society in a way.
It's kind of become a cause for you.
Correct. And to continue it that way, right? So not to pivot the business, not to change it into, something else, but to continue to give people a platform that allows them to raise money and organizations as well, raise money for causes safely and efficiently, right? And that in and of itself, helps their causes. Yeah.
So how do you yourself give back, apart from providing us with a platform?
Yeah, so we do CSR donations as a platform as well. So from time to time, depending on the partner, we waive fees for campaign transactions. We go out, we can attend events. So we've done introductions with various groups. For example, the Rotary Clubs of Kenya, we've attended a lot of their events to talk about, the space, talk about what we've seen. So from an educative perspective, we are happy to go out there and do events with potential partners, and then also hard cash CSR activities like waiving transaction fees.
Are you involved in kind of like partnerships with the people, like the charities, the big charities in the country, across the continent? Like you come and design campaigns together, or they just use your platform?
Yes, we've worked with the UNHCR. We work with Global Giving, which is the largest crowdfunding platform on the planet. So yes, we work with our partners. We co-launch campaigns. For Global Giving, we've been their Kenya infrastructure partner for the last 6 years. And so anyone donating to their causes have campaigns on Global Giving and have campaigns on M-Changa and increase the pool. So yes, we work with global partners. UNHCR, we've done a few campaigns around Sudan. And so yes, so we collaborate. Yeah.
And are you planning on going public, selling shares to Kenyans, or are there people, you bootstrap this, grew, avoided having to get people to come in and take part of the company? Are you now getting to a point where you're clear on maybe you need to raise this much and you need this kind of partner, or are you okay? Are you okay to go on as you've been going?
For now, we're okay. We feel like we have partnerships that we have in play, right, that will help us achieve our goals. So publicly listing may be something in the MSME segment in the Harambee Stock Exchange, maybe something in the future. But for now, no, we're still growing this product. We're in different markets. We're excited about that. We know what it takes to break even. We think we can. So we're
so what are those goals? Is it to make $1 billion, or what are your goals? What makes you wake up every morning to go to work?
We want to be, and we have become, at least for Kenya, right? We've become a recognized platform for fundraising, right? In the 10 years that we've developed M-Changa, right? If you want to raise transparently, if you want to raise efficiently, yes, you come to this product. There's other ways you can raise, but that's what we wanted for Kenya. Our goal is to be that for all the countries in Africa that we're expanding to as well, and eventually become Africa's most trusted fundraising platform. Yeah.
That's a huge goal.
That is a huge goal.
Yeah.
Yes, but it's possible. I didn't mention that for about 3 years in between the M-Changa journey, I worked for a company called Pompey, which was a financial services arm of Transsion, the techno phones.
Yeah.
Right? So this is their financial service arm, and they launched a Pan-Africa payment platform starting with Nigeria, right? And now they're in multiple countries. I was part of the first kind of founding team. And Africa seems big, but Africa is also accessible, and people have done it, right? There's local homegrown Pesapals and Cellulants that have kind of gone across. So it's daunting, but it's doable.
I think.
Yeah, Cellulant as well, M-Pesa, right? M-Pesa. So it's daunting, but it's possible, and I have experience doing that. Part of the reason why I did that was to also get experience for my own company when it came to Africa expansion. So it's a lofty goal, but we believe there's the need. And Africa, like Kenya may have been the first, but Africa is just coming online now, where mobile money is, at least in the markets where we're expanding to, is mainstream, right? It's kind of like we were maybe 10 years ago, right? And now you have the tills and you have things like that. So now is the time for that. Now is like donations will be unleashed through mobile money and will be trackable, will be, and so that's what we want to be.
So ultimately, in the next 5 years, you've been there for, I think you've given us the stages, founding 4 years, 10 years now. Where do you see, how many countries do you see yourself in the next 5 years?
So in the next 5 years, and we will follow the mobile money, right? So we have 7 now. We started 2 years ago. Typically, about year 3 or 4, you have break even, right? So those markets will cascade into break even. Ethiopia, there's Egypt, right? And through our collaboration with the Southern African platform, there's the SADC community, there's Zimbabwe, right? So eventually, between the two of us, and on our growth plans are kind of, we're looking at the continent together. We each have our strengths, and we collaborate. Is eventually to cover all the markets where we have the payment infrastructure necessary for this. So it could be a 30-country play in the end.
In 5 years?
In 5 to 10 years,
Wow.
yes.
Wow.
Yeah.
And we hope that we wish you success and partner with that. I'm part of Africa's Rising. We are also calling for a borderless Africa in terms of physical borders or movement of goods and services. And because we work in the civil society space, if M-Changa is available across the continent, that works very well for the do-gooders on the continent. So we hope you actually succeed in achieving that.
We do, and if I can add, at M-Changa we work with what we call champions. I believe you could be one of them, but champions are typically people that are kind of selfless and give their time and efforts towards causes, and essentially can unlock either awareness of a cause or even actual mobilization of funds for a cause. It's a 4-year program. We have seen champions within Kenya and Uganda raise millions of dollars, right? Just because of the places and spaces they occupy in society, their levels of trust that they engender, and their passion towards those things. So a big part of our growth strategy in Africa is to identify champions who would be drivers of activity on the platform. So it's something that we're very much looking forward to, especially with Uzalendo, to put together the kind of collaboration with the types of champions that we are aware are part of this initiative to really embed this giving and unlock local giving.
Yeah, later on we'll talk about the kind of thinking we are doing together in terms of trying to restore that trust in giving and enable Kenyans to actually support the initiatives towards solving some of the challenges that Kenyans are facing.
Yes.
So Chai, thank you so much for making time talking to us about M-Changa, one of the biggest success stories in the fintech space. And the platform that enables Kenyans to do good, to support each other, the spirit of Harambee, which is how this country was built, and what we call Utu na Uzalendo, dignifying Kenyans, fundraising for hospital bills, fundraising for school fees, fundraising for education, or any other causes. I think I've seen people fundraise for weddings,
Yes.
Or just birthday parties,
trips.
Yeah.
So yes, just a lot of different things. And thank you very much, Mutemi, for having me here. Happy to have shared a little bit of our story, and we look forward to working together.
Yeah. Asante sana.
Thank you.
Thank you.